Hello and welcome from the sidelines of the ICR 2024 conference here in Orlando. I'm Jarrett Banks, editor-at-large of CorpGov, joined by a friend of the program, Lawrence Elbaum, partner at V&E. Lawrence, welcome.
Hi, thank you. Thank you for having us.
Lawrence, last year was a huge year for activist investors. Some 823 new activist campaigns launched globally, a 24% increase from the prior year. What are we expecting this year?
Well, if you look at the mix of gray to brown hairs that I have left, I think we're going to shift entirely to grays and silvers this year. Look, we have an economic environment this year in an election year where I would expect interest rates to be a little bit more flexible. That could drive M&A. One of the things we did not see the last few proxy seasons because of a dry capital and finance market situation was campaigns purely pushing for companies to be sold. So I think we're going to see a lot more of that this year. We'll see the regular run-of-the-mill campaigns just to put directors on the board to try to change the company's strategy. I also think that we will see a continued number of equity mergers between companies that don't have buyers but need to figure out something to do. They're getting pushed by investors to do it, likely. We'll see activism against those mergers too. We've seen a lot of it the past few years because of thin premiums. So companies and their buyers in the equity situations are going to be holding back some value because they're assuming that someone's going to challenge their deals. And I think we're also going to see more campaign settlements this year than we've seen in previous years because a lot of companies in the retail, hospitality, in the ICR space, retail, hospitality, consumer, restaurant spaces, they're going to be comping negative year over year or flat. But more importantly, looking back 3 years to 2021, when we had the COVID bump year, I think there's going to be negative or stagnant comping. That's going to make companies vulnerable. They're going to want runway and peace and quiet to execute on a plan. I think that's going to drive a lot of settlements, particularly early. Last year, we saw in the Universal Proxy Card, the first year of the Universal Proxy Card, first full year, we saw early on a lot of settlements and then a lot of campaigns that went all the way or went further to an actual proxy fight. I think we're going to continue to see that this year. In investors finding better candidates, companies are finding better defense strategies. They're getting ready much earlier for these campaigns. So I think it's going to be a very interesting year, thankfully.
Let's drill a little bit down more into that. Activists will come up with better and more qualified candidates for board seats. What do we mean by this?
So if you were to go back 15 years, activists were oftentimes, even this, like the celebrity activists nowadays, were oftentimes nominating themselves to the boards or nominating like the from the usual stable of candidates who they knew could get into the boardroom and get their work done for them.
Mm-hmm.
But what we've seen, particularly in the last 5 to 7 years, is a real improvement in the quality of candidates that activists are finding for boards. It's been driving settlements. The reason they've done that is because institutional investors and ISS and Glass Lewis have become increasingly more focused on who are these agents of change going to be in the boardroom. Are they going to be pursuing agendas just for one investor or for all shareholders? Do they actually have the experience to help achieve the goals that the investor activist thinks that the company needs to achieve? And now with the universal proxy, it really behooves not just the activists, but it behooves the company to really have their best foot forward in terms of the slates they put up, because now investors can mix and match. So we think we're going to see better candidates on both sides. There's also been less of a stigma for public company directors to work with investors. High caliber activists are able to source highly qualified candidates. There's no longer the same stigma that once you work for an activist, you can never get onto a public company board again. I think that that wall has been broken down somewhat.
We saw some huge names last year. Do we expect that trend to continue?
Yeah, look, I think we've seen since the beginning of the pandemic that no company, no brand, no matter how big, no matter how old, no matter how well known, is impervious to activism. We're going to see the biggest companies get targeted because even small investors in those companies have been able to demonstrate that they can achieve success, whatever that is. Get the stock price up, get a few board seats. It's tough to get a giant company sold, but break up a business, dispose of a business, so on and so forth. So again, it all depends on how the companies are performing and how their investors feel about them over the past 1, 3, and 5 years, performance-wise. But I don't think any company of any size is impervious. Just to give a frame of reference, we worked with companies this past proxy season in excess of $250 billion of market cap. And we worked with companies with under 50 million of market cap. It's a full range, and the campaigns that we worked on were evenly spread throughout. And mega cap, there's 1 or 2, but when you look at, in our practice, we're typically involved in 40 or so public situations a year. I think a third is micro cap, a third is small cap, and the rest are mid and large cap fights spread around pretty nicely.
Now, we talked about the Fed and we talked about the macro environment. Does the election also play into any of this?
It does. I do think that right before the end of an election year, you do see a lot of M&A if the capital and financing markets allow for it. So I would expect, you see it every calendar year anyway. You normally see a drive for M&A in the last quarter, but particularly as an administration may change, you see an uptick because you never know what's going to happen in those last few months. There's always the thought that it could be tight or you could have an administration change. But if it looks like, when we get into early in the last quarter of the year, if it's looking like there's going to be a clear winner, I think that will drive activity definitely one way or another.
And if you were advising, let's say, a CEO of a major company, how do you tell them to approach an activist campaign?
The most important thing that a CEO can do is be intellectually honest about how he or she is doing running the company, how the company has performed. One of the biggest mistakes that we see executives get into is not admitting that there have been issues, and on the flip side, admitting, look, we had a hiccup, we saw it coming, here's what we did about it, we've got a great board, the management team is working away at it, and here's the path to improvement. Those companies typically have a better chance of handling an activist situation successfully than the company that says, or the CEO that says, it just takes time, we're baking bread here, and it just takes time for the bread to rise, and the circumstances are out of our control. It's a matter of figuring out what's in your control, admitting that there have been some hiccups, and then charting the path forward. The other thing that the CEO should be doing is really an inventory check. Right after your annual meeting, get your annual meeting results. How did the directors do? What was the say on pay vote? Look at the ISS and Glass Lewis reports. Put a scorecard together of where you did well, where you're lacking, where you have red flags, and think about your proxy statement 9 months out into the future what you wanted to say. Think about the things you'd want to say if an activist was live against the company several months down the road, and start planting those seeds over the summer after your annual meeting, as opposed to late in the fall or in the winter when it's probably too late and the investors have created a groundswell. Focus early on. If you're a CEO, this doesn't directly answer your question. It's how to engage with your other shareholders, not the activist. Build support with your other shareholders in the off season. One of the things that our clients wish they had from a defense perspective when we're in a proxy fight is a public statement from a supportive shareholder. They're very tough to get, but if you invest the time and the resources early on in the annual meeting cycle, you can line those up. They're very valuable to have an independent third-party endorsement of the company. So we recommend, to help with your engagement with an activist, have another shareholder that's willing to go public to say something very positive, because it could give the activist a gut check on their thesis.
All right, we'll leave it there. My thanks to Lawrence Elbaum, partner at B&E. This is Jared Banks signing off from the ICR conference here in Orlando, Florida.